And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show. I'm Mike Harrison, and as always, we're working on your financial freedom. I want to thank you for joining us today. Today's show, I have a guest, lead investor from the Central Texas area. This lead has been involved in real estate investing since approximately 2015. We'll let him tell us. He's a lead in 3 properties, a passive in several more properties, and he is real estate retired. Real estate investing enabled him to leave his corporate job and focus full-time on real estate investing. He's so successful at what he does is his parents joined as well. And not only are they passive investors, but they took it an extra step, and they are actually Lifestyles Unlimited ambassadors here in North Texas. And Chase, your parents are wonderful people. I love seeing and visiting them at various Lifestyles events. And if I recall, didn't your father, wasn't he able to retire, 2 or 3 years ago due to passive investing?
Yeah, pretty recently. He always jokes that, I beat him to retirement, but it was good for him to finally be able to kind of walk away when his practice, they were looking at what are we going to do next? How are we going to have enough business for all of the partners? And he was in a position to say, you know what, guys, I'm good. I'm just going to walk away.
How incredible is that? You retired, you beat your father, you're a young guy, you retired at a young age, and then your dad looks at what you're doing and says, hey, this looks good to me, and he jumped in and he was able to retire as well. I love that. That's a wonderful story. And Chase, I want to thank you for coming on the show today. If you would, why don't you just share a little bit of background about yourself, and then we'll jump into the heart of the show. Sure.
I went to Texas A&M, graduated from there with a degree in computer science. I loved tech. I loved programming and just had a blast doing that. And I worked for a couple of different companies. I was really successful, moved up quite a bit in my companies. I was, running teams of developers and everything. But tech kind of shifted on me, and it became very commoditized, like the art form and the creativity left, and it became just a lot of widget work. And, I just realized I'm not enjoying tech like I used to. I'm kind of frustrated with it, a lot of internal politics in corporate America, that kind of stuff. And I was coming home kind of frustrated and angry. And a friend of mine actually in the office, he's a Lifestyles member and lead, he heard about Lifestyles and said, hey, man, I think we need to go check this out. And so he and I went to one of the free, quick couple-hour workshops, just that high-level overview. This is what it's about. And from there, we said, yeah, definitely worth, putting in a little bit of time and money, and let's go, listen to the deeper level information that we can get at the 2-day presentation. We did that, and it was a no-brainer to jump into real estate. And I looked at it just from the standpoint of just passively investing. Where can I put my money and get a good return that'll help me move down the road to retiring when I'm, 50-something years old, right? And after doing a few passive deals and just, what I always think is important, continuing to come back to Lifestyles, even when I didn't have any more money, just to keep talking and learning and networking with people, I realized I was enjoying everything I did in real estate so much more than I was enjoying the job that I had in tech, and decided, I love this business. It's easy to get into, right? It's forgiving if you make a mistake. I'm going to make a jump. I'm going to start becoming a lead investor myself. I know I can do this. And, I have my mentors with me and all the training through Lifestyles. I was ready to go. And bought a little 20 unit in a kind of no-name town just north of Dallas. It was a commuter city to Dallas, and ran that myself and was very successful with that one. Went from there to buy, 114 units all the way up to now 238 units. And, I just kind of was able to walk away from my my corporate career, where, I was doing well, and the more money I made, the more time they wanted for that money. Now
Yes,
I've got the time to focus on my health, my family. I went from 300 plus pounds. I dropped all that down to being lean and in shape and, playing tennis, and my life completely changed. My health has changed just by finding that freedom.
And that was, there's a lot to unpack there, but that was right around 2015 when you first went to Lifestyles Unlimited, Chase?
I think it was closer to actually like 2013 when I first joined, like right at the end of 2013.
Okay.
And I did my first passive deal in 2014, and I closed my first lead deal, I think, around 2016.
Yeah, I was looking at your bio, and you got into 3 or 4 passive deals prior to investing in that first 20-unit property north of Dallas-Fort Worth. And my original thought was, and you answered it, when you first joined, your plan was just to go passive the whole time, and lead occurred later after doing it for a period of months or even a couple of years? Or how'd that all, what was your plan when you came in, and then why did you transition and say, hey, I want to be a lead?
I never planned to be a lead, at least not quitting my job to become a lead, right? I was like, I'll invest passively. Maybe then when I make enough money, I don't know when that'll be down the road, when I retire and I don't know what else I'm going to do with myself, maybe then I'll be a lead. But, as I got into it and realized how much I loved real estate and I loved being in control of your own business and your own destiny, I said, how do I rearrange things so that I can actually make this jump now?
I have a guest on the show today, lead investor from the Central Texas area, Chase Maupin, and Chase is a lead investor. He began passive investing prior to that. He joined right around 2013. Beautifully, Chase is real estate retired, and also his father took a look at what Chase was doing, and he is now real estate retired. But when we left off talking to us about the freedom of real estate investing versus corporate America, essentially, not only do you get your time back, you get all... There's none of the deadlines or any of the projects that corporate America puts on our shoulders, the politics, just everything that comes with that. And then when you walk away from that, there's so much freedom in real estate investing. You began as a passive, and then you decided to become a lead. Let's talk about that first property at that time. How'd you find that property? Was it a prior Lifestyles Unlimited members property that sold it to you, or what made you say, heck, we're going to do this and buy this property?
Yeah, we connected with the different listing brokers that kind of move properties in the area, and it was a blast from them saying, hey, we've got this property coming on market. It wasn't very far from my house, so I was going to be able to be on site and be there and run this thing and really dig my hands into it. Turns out it was a previous Lifestyle member. They just, had bought it and just kind of held on to it for a while, not really doing a lot with it. So I didn't know the person. I hadn't seen them at meetings. But, we talked with our broker. We had our Lifestyles broker represent us in the deal and help make sure that we weren't missing critical things. And it looked like a great opportunity, and went in and bought that thing and really learned the business by getting hands-on deep into it.
I agree. I think it's great to take on those smaller properties at first. And share with the listener, where'd you see the value? What was the play here, and how'd you know you were going to be able to improve this as essentially improve the business and improve the asset?
Yeah, so in that town, a lot of people would drive. They take a 20-minute drive on the highway to get away from the higher rents that you found in, McKinney and Plano and places like that. So I looked around and said, there's not a lot here, but what I can see is that they're several $100s below the current market without even being improved. And that was just the rents been raised in like 5 years. They were raised when the property was bought and never touched again. Wow. So I knew going in, before we even do rehab, there's room on the rents. But then I also knew that this property was due for, some capital to go into it. Let's make these really nice homes. These are where people live, and we want to give them a great place. And I'm sure that they will, pay for a better place. And sure enough, even as we were turning some of our different units, we would have existing residents say, hey, do you mind? We'd happily move from ours into this new one that you just did, which really kind of accelerated our business plan, right? Because we didn't have to wait for their lease to expire there. They would move from that one into the new one, happily paying more to get that newer place. And then that gave us their old unit that we could fix up in turn.
People appreciate a nicer place to live, and it's contrary to popular belief, but you're not just going in and raising the rents, you're providing some value. So you're going to redo the interior, give it a facelift, maybe add new countertops, stainless appliances potentially, or hardwoods or tile or what have you, and you make it a nicer place to live. And yes, people will pay more to live in a nicer place. I hear so often that people that don't understand real estate, they think the idea to make money is to buy the property and then don't put any money into it. And that's 100% the opposite of what we do. Chase, any big surprises on that property?
Nothing too terrible. We had a sewer backup on one thing. That was new to me. That was kind of fun. One guy had painted his entire unit black. Oh, wow. Like deep black. So that was going to take a while to fix it. But no real big surprises for us aside from just learning that business, right? Like learning, you get a weird resident. You're like, okay, we're going to have to evict this person. And I've never done that before. But that's what we have mentors and consultants for, to tell you, don't freak out. Here's how you're going to go about it, right?
It's a simple process.
Yeah.
This is the business, running the business. So you purchased that in early 2016, and then 9 months later, just a short time later, you went from a 20 unit all the way to a 116 unit. That seems like a big jump to go to that size. Did you have any concerns?
Oh yeah, it was a lot bigger. It was in a slightly different market, but again, I knew that I had people there on my team that had my back as we were going through this. It was nice to move up to where we finally had some staff on site, some maintenance and leasing and people that could help run the day-to-day of the business. But, I felt confident having, I'd done the bookkeeping on the old business. I'd done the leasing. I'd done some of the maintenance. So I kind of felt good about, I know the different jobs as well, and that's going to help me oversee what these people are doing on my property.
Yeah, you learned the business on the 20 unit, and then when you went to the 116 unit, it was large enough to have a manager, a maintenance, maybe even an assistant. How many did you have, 2 or 3 people on that property?
We had 3. We had one in the office, a manager who also, leased, and then we had 2 maintenance because it was an older property. There was always something that needed to be maintained. Right.
Okay, and on that property, looking at your numbers, you returned a pre-override to your investors of 200%. Explain to our listeners what pre-override return means.
There's some compensation that comes out on the top when we sell the property that goes to like myself as the person who runs it and my key principals that help secure the property and secure the loan. So there's a little percentage that's going to come off the top of that. And then the rest of the investors that put in capital, we all split the rest of the money that's in there. So all told, I think people made about, because we held it for just under 2 years, they made between about 45, I think, or so percent every year return on their money.
Annualized. Nothing wrong with that at all.
No, but you can't beat that. Well, you can, but but it's certainly better than you're going to get it, better than it in the bank.
45% annual return. That's incredible. I think that blows people away that really don't understand what we do in real estate and why the returns are just so incredible. And, of course, along the way, you also get cash flow. That's just the big distribution at the end. And, Chase, in the later half of the show, and we're almost up against a break, I want to get into some of the market conditions that we're seeing today. But out of curiosity, what interest rates were you seeing in 2016? Do you remember on those deals?
Oh, gosh. It was between 3 and 4, as I recall. But, yeah, you're taking me on the way back track. So it's hard for me to remember my exact rate.
And I was investing in single-family houses at that time. I even had a house that was at a 5.5. But where I'm going really is you weren't paying 2.5%, and you weren't doing interest only, and some of the stuff that we're seeing on these properties that have been purchased recently, and also say within the last year or 2 years, you were paying a pretty solid interest rate. I mean, it wasn't a 6.5%, but it still made sense to invest at that number, is where I'm going. We're going to pick this up on the other side. My name is Mike Harrison. You're listening to the Lifestyles Unlimited Real Estate Investor Radio Show.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
Successful Lifestyles Unlimited member retires in 10 months.
The hardest part for me was to drop off my son, go to a job that I absolutely hated for 5 years, but know that that was a sacrifice that I needed to make, and then only be able to get to spend 2 hours with him after school before he had to go back to bed. So that's why once we started and we joined Lifestyles, we said, okay, we have a roadmap. We know what we're gonna do. And then a month later, we find out we're pregnant with baby number 2. And we're like, okay, we gotta kick it up a notch. So that's how we were able to purchase 4 different properties and replace in 10 months, replace my income in 10 months so that whenever I finished maternity leave, I didn't have to go back to work.
I think a couple weeks before baby came out is when we closed on our fourplex. And that was enough for her not to have to go back to work.
Are you ready for your roadmap to real estate retirement? Attend the online free workshop just like Carolina did. Register at lifestylesunlimitedworkshop.com.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. I'm Mike Harrison, and as always, we're working on your financial freedom. If you'd like to send an email or comment on today's show or have any questions about real estate investing or Lifestyles Unlimited, my email address is askmike@luinc.com. askmike@luinc.com. If you're just now joining us, there are 4 ways to consume the Lifestyles Unlimited radio content. The easiest way, the one I use most, is podcast app on your smartphone, right? We all have smartphones. Hit your podcast app and subscribe to the Lifestyles Unlimited Real Estate Investor Radio Show. It will upload automatically with all the new shows, and you can listen to it in your free time. We have a YouTube channel. Go to YouTube, type in Lifestyles Unlimited. You'll find our channel there. On that channel, you'll have more than just the radio content. You've got all kinds of, we call them case studies. You'll have all kinds of road trips where we actually go visit some of these assets and walk them, and you can see what we're doing as real estate investors, what we're looking for, how we're analyzing properties. As always, you can go to our website, lifestylesunlimited.com, and you can always live stream us. If you know the shows on a certain radio station at a certain time and you have internet access, just go to that radio station's website and type in Listen Now or click the Listen Now button, and you can hear the show live over the internet. I have on my show today lead investor from the Central Texas area, Chase Maupin. Chase has not only invested passively, but he's a lead investor. And Chase is here. He's sharing his path to real estate, why he left corporate America, how real estate enabled him to walk away from corporate America and retired. And Chase, as we were getting into it, you became a lead. You learned on a smaller property. You moved up to a bigger property, and then you moved up to an even bigger, larger property. You keep getting larger each time. What are the challenges associated with going to these larger properties as a lead investor?
Yeah, well, going to the larger properties, I think one of the big changes for me was like with my 20 unit, I knew each unit intimately, right? I could tell you who was in every unit. I could tell you if it had been rehab, what the state of it was, everything about it. You start going up to 116, you start going up to 238 units, and you track that stuff in a spreadsheet, but I can't picture in my mind's eye what, each unit looks like. I can't picture each resident like I used to. So I don't, it becomes much more just kind of like data-driven. And a lot less of I personally know everything about every unit. Yeah,
it's an entirely different challenge, right? On the 20 unit, you know that unit number 7 may or may not have this ongoing issue, but on the 200 plus property, you don't know what the heck's going on in unit 116 unless you pull it up online and I guess look at your business there. It's more about managing people on the larger properties than managing the property. Do you see it that way?
Oh yeah, absolutely. There's more people that have their own, drama or issues or needs or wants. It's not terrible, but it's certainly, the more people you have around, people are the unpredictable part of a business in a lot of ways, right?
Yeah.
So the more people you have, the more likely that you're going to have somebody a little unpredictable, but you can manage through everything.
Yeah, what is it Dale Walmsley says? He says real estate's easy, people are difficult.
That's right.
Yeah, and when I was in my corporate world, I had some reps that were underneath me, and you're exactly right. It becomes a people business as opposed to a ground level like it was on that 20 unit you're managing. Inspect what you expect, and people are great until the moment they're not. So looking now at where you are you, how do I say this? Are you where you thought you would be as a real estate investor when you first started this 2013, 2014?
I'm pretty close. I thought I might have bought another property by now, but I'm a very kind of slow and methodical guy. I'm kind of the mindset of, hey, if I don't care if this property that I have is doing great, if I still am kind of doing things day to day, I'm not going to take my attention off of that in order to go look at something else. So, I've spent a little bit more time on my current property, just keeping an eye on it, working through stuff and making sure that it's optimized and working just how I want it to. And then when I said, great, I'm ready to start looking again, boom, we had some interesting stuff go on in the lending markets and in the capital markets, and buyers and sellers, we're not always agreeing on what value should be. And so it's just the time where I'm kind of like, I will look, but I'm taking my time to find a deal. I don't need to just buy something.
Yeah, you mentioning that the market changed, and that's the understatement of the year. I mean, it has been dramatic in the last 6 months. But when you and I were chatting the other day, I think the next 6 months are going to be even more dramatic, if that's the word you want to use, with what's happening in the markets. And explain, if you would, I know you were looking for a property, but what exactly is going on now? Because there's a lot of the sellers are feeling it's not a seller's market anymore. Let's put it that way.
It's not, but I don't think every seller has gotten that memo. Particularly if they're in good financing already, where they don't have to make a decision or have to do something. They're still wanting the prices they were seeing and the prices that they thought they could get, 6 months ago. And at those prices, with the way that the current loans are, whether it's the loan to value or the interest rate and everything, it just doesn't make sense. So the buyers and the sellers are going to be a little disconnected for the next few months.
Right.
Until people, and that always happens, right? When something shifts a little bit, the two different sides of the coin take a while to find equilibrium.
Yeah, you have a group of, and we'll call them sellers, people that want to sell property. However, they have stable lending, as you mentioned, and so their option now is to either sit on it and wait and ride it out, which they can because they do have stable financing, and maybe they're just having to hold it a little longer than they initially planned. But what's wrong with having a cash flowing multifamily property for another year or two until interest rates come down? But on the other side of that, you've got folks that have bridge loans, for instance, that are going to come due. And explain for our listener exactly what a bridge loan is and what this means.
Yeah, I mean, I personally have kind of always stayed away from bridge loans. They have their purpose in the market, right? Particularly around like values. But usually a bridge loan, it's a shorter term loan. The goal for that is they'll give you some credit towards what you're going to do on the property, how you're going to improve it and improve the income. So they'll give you some credit towards that so that you get a little bit better leverage, right?
Yeah.
Like on maybe a mismanaged or poorly operated property, one that's really run down.
Yeah.
That way it makes it easier for you to buy it, fix it up, and then you're supposed to get out of the bridge loan. You're supposed to fix it up over that 2 or 3 years of your term and then get into permanent real financing going forward, or, sell it, do something like that. But you're not supposed to stay in that bridge loan.
Yeah, and doesn't the bridge loan in a lot of instances reset to the current market interest rates?
A lot of them have floating rates, and you can purchase rate caps, but those get really expensive, particularly when they start looking like now, right? We were putting a property on the market, and with the projection of rates, it was going to be well over $1 million just for people to cap their rate in the 7%.
Yeah, and that's money that's not going to the bottom line. It's really just insurance. And if you're capping at a 7, wow. I mean, people are coming from a 2.5 to a 3 into a 7. You could see that if some of these bridge loans truly reset to these higher rates, there's going to be some properties that are no longer cash flowing. They're no longer making money. People are going to be underwater. I want to invite you to our Wealth and Passive Income Expo and Masters Tour. That's February 15th through 18th, 2023. It'll be right here in Irving, Texas. If you need more information, please go to wealthandpassiveincomeexpo.com. I can assure you this event is a blast. You will have a great time. There's a lot of networking. There's a lot of breakout classes. You can meet lead investors like Chase, who I have on the show today. Chase is a lead investor in the Central Texas area. Chase, I'm sure you're planning on going to the expo, correct?
Absolutely.
What's your favorite part of the expo?
I really like the meet and greet. I'm a networking kind of guy, so I love just getting to talk to all the different people that want to come up and just tell me what they're trying to do and listen to what I'm working on. It's one of my favorite parts. Yeah,
I agree with you, because that's a great time where we reach out to these leads, and a lot of them are in other states, for instance, Arizona, California. They're all over the country. But this gives us a chance to essentially kind of put a face with a name. We've been in dialogue with this person, or maybe we've invested with this person, and we finally get some face time at the expo where you get to meet lead investors and see if their business plan is a good fit for you as a passive, and vice versa. It's got to be a win-win for both parties there. Chase, we were talking, you essentially were in the property search at the beginning of this year and maybe late last year. Have you shelved that, or are you just waiting for your terms essentially to show up here in this market?
Yeah, so I haven't shelved my search, but I am definitely waiting for kind of a meeting of the minds between sellers and their expectations and me as a buyer and what I'm looking for and what I'm looking for my investors in the current market conditions. So, I think as time goes on and we see some of these loans come due and people adjust to the new reality of the market, we'll be able to find some deals.
I like the idea that you're not forcing it. You're not saying, you're not getting creative with the financing or saying, if we do this, we do this, we do this. You essentially kind of have a game plan, a standard of what the performance needs to be and what the price needs to be based on that performance. And I like the idea you're holding it. And I agree with you. There are going to be some people that have to sell because they're the ones that did the creative financing, right? The property was only cash flowing with an interest only, and they had the expectation to push rents to a certain percentage. And both of those, now the interest rate's really high, and the fact that people can't or may not be able to push rents the way that they gambled, right? Is that what you would say? Was everyone gambling? The banks, the buyers, the brokers? What are your thoughts on that?
I mean, gambling might be a little bit strong. I think that maybe they just there's always that assumption of when things are going well, they'll always go well. And they didn't plan for how will this look if terms shift, right? So they may have even hit their metrics of pushing their rents and then gotten their NOI up, and they're hitting all of their metrics, but they didn't expect to exit at 7-something% interest rate to come out of that loan, right? Yeah. So, I heard a broker say it really well, and I agree. He said, look, nobody could really quite predict what was going to happen in the capital markets. So I don't blame people, if we're exiting now and we're maybe not hitting all of the returns that we were hoping to get. I'm just focused on return of capital instead of return on capital. Exactly.
Yeah, that's a great point. And I guess where I'm going is we got away from, and not we, but there's buyers of multifamily properties, not necessarily Lifestyles Unlimited members, but there's a lot of multifamily owners out there in this country, all across the land. And we got away from writing those deals with a solid, stable interest rate, and then stress testing it, say, where are we going to be if we had 70% occupancy? And instead, they got into not only writing deals, but buying deals that essentially only worked with an interest only for the first couple of years, and they were planning on resetting into a 3%. I guess 11 years of prosperity, all these banks and buyers and brokers, they ended up with short-term memories. And now, truly, I think some people are going to be stuck, and they're going to be forced to sell here in the next period. What do you think is going to happen over the next 6 to 18 months? I think interest rates at least are going to be high for another year.
Oh, yeah. I think they're going to keep going up. I think the Fed's already signaled, at least another point in rates going up. So, that's just going to keep eating at people that are saying, well, maybe I try to extend my bridge and hold out a little bit longer. I don't see rates dropping very rapidly. They'll come down eventually. They always do. But yeah, I think you hit the nail right on the head. I think people that got short-term memories, and it's just always going to be golden. And they didn't do their stress testing. They didn't plan for the what ifs.
Yeah, no, you're right. And then another thought on that is I get a lot of email about people wanting to invest in real estate, and then they say, well, all my money is in the market. And we can go back 3 years of these emails or questions that I get from people, and their money's in the stock market or the IRA, which is where mine was when I originally found real estate. I had to pull from those. That's where I kept my bag of money, right? I didn't have 100 or 200,000 outside of that. I was doing what I was told to do and what I was taught to do and what I thought was the right way to do things. But I would tell these people the same thing. Do what I did. Pull your money out of the stock market and then invest in real estate. And this was 2018, 19, 2020, 2021, and everyone pretty much would come back and say, well, I don't want to do that. The market's doing great. Now where are we? The market's down, 30%, 40%, and with no end in sight in that, I think it's going to trend down. I didn't look at it today. I don't look at it every day like I used to. And now I don't know, people, again, Chase, it's fear of loss and short-term memory. So back to the loans, do you see now, because you and I both agree that interest rates are going to go up and they're going to stay up for some time, this assumable loan, do you see that as a strategy for buying multifamily properties?
Yeah, I'm already kind of seeing that from brokers, right? They're pushing out properties, and part of the marketing package is attractive assumable financing. Because, the biggest part of our mortgage payment is the interest, right? It's not really even the principal part. So, I might assume a loan and it doesn't have any interest only left on it. But if it's got a rate at half what I can get now on a new loan, that's still pretty attractive. That's going to save me more money even if I am paying principal. So I think we'll see that. And people are talking about maybe starting to buy things a little bit like more cash. Certainly more money into the properties, more money down. So I think we're going to see some shifting there. But I think the assumable financing is going to become big, because it used to be, I was like, oh, well, you had a pretty decent term, but, now the rates are the same or a little bit lower, and I can get a brand new IO period. Why would I assume your loan? Well, because my loan's going to be several percentages points lower in interest rate than the one that you can go out and get today.
Geez, I think doing an IO loan that's like juggling with loaded pistols. That's not something that I would even try or be interested in today's market. I truly believe we're in for a 12 to 18 month ride of high interest rates. They've got to turn off this inflation before they can begin lowering them again. And look, I don't have a crystal ball. I'm not an economist. None of that. I'm just been around long enough to see 2008, 2010. Been around long enough to remember the tech bubble that blew up. Chase, is there an extra step in an assumable loan, or is it pretty much just like getting a regular loan if you meet the terms you're in? Or I guess my thoughts are banks willing to allow that third party to take the assumable loan, or are they thinking that we'll let this loan reset at this higher interest rate, or we can loan that same amount of money out to a higher interest rate rather than letting someone assume this loan? Do you have thoughts on that?
Yeah, that'd honestly be new territory for me. I've never gone through an assumption. I'd lean heavily on my lifestyles mentors and my mortgage brokers because they bring all that kind of knowledge. My layman's knowledge was always kind of like if you got a buyer group that can bring the same net worth and the same liquidity and all that, you can assume that loan. But you're right, the banks may push back a little bit on that, and that's where it's going to be important to have your team of lenders and people that can help you get that deal done.
Yeah, I've never been through it myself. I don't know a lot about it, so I was just wondering if it was a complicated process, or it might be very simple for all we knew. So, Chase, as we wrap it up, what are some of the most satisfying aspects of real estate investing? You've been doing this for a while now.
I think for me, one, it's being a little bit in control. You're not dancing to somebody else's tune as much as you do when you're in like corporate America. Two, it's the ability to really just like change these properties, improve them. You can go in and find a property that's just run down and nasty, and with a little bit of elbow grease and putting some money back into them, you can make an awesome place for people to live, and that changes lives. And it changes the lives of your investors because you get them a return for having provided that value. And that gets people to be able to retire, like my dad being able to retire, right? Other people in lifestyle that you talk to all the time that have retired through real estate investing. That's life-changing.
That's a fantastic gift that you found Lifestyles Unlimited. You joined. You were able to retire from corporate America. Your dad looked at what you were doing, and then he was able to retire as well. And then, yes, there is a huge satisfaction to taking a property and making it clean, functional, better place to live. I've experienced that on the house side. I've had neighbors come out and thank me. Just a great feeling. Chase, I want to thank you for coming on the show today. The rest of you out there, I want you to remember, just like Chase said, it's not the money, it's the lifestyle. My name's Mike Harrison. We'll see you next week.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.